Good afternoon, everyone. This is Kathy McBreen of the Spectrum Group. Welcome to the merry little month of May. And we're excited to be talking to you today about some of the results from our Investor Confidence Index. And then later on, I'm going to discuss some of the research that we just completed about the attitudes of wealthy investors. So I'm going to turn it over to one of my associates here, Randy Wostraztky, who's one of our directors, to talk to you a little bit about the index this month. Randy?
Thank you very much, Kathy, and good afternoon, everyone. And we appreciate you taking the time to be with us today as we review in the first half of today's webinar our latest Affluent and Millionaire Investor Confidence Index data. After we go through that, as Kathy mentioned, she'll be going through some of the highlights from our recently published Q1 Wealth Segmentation Series research. Those who are or are not familiar with Spectrem, that is constituted by our research with mass affluent, millionaire, and ultra high net worth investors throughout the first quarter of 2017, with a lot of questions covering their attitudes, behaviors, and things similar to that. And then when Kathy is finished going over some of those key findings, I'll spend a little bit talking about our High Net Worth Insights newsletter. Also, please note on the right-hand side, if you do have a question that you would like Kathy and I to address, please type it into the right-hand side of your screen, and we'd be happy to go ahead and address it. So starting with our index data from the month of April, as you can see, month over month from March to April, the Millionaire Investor Confidence Index increased 10 points, and that is up 9 points from the same period 1 year ago. We are just below, only 5 points below our highest ever, which was from March and April of 2004 in the Millionaire Index. Below that, you can see the Affluent Investor Confidence Index, which has traditionally trailed the Millionaire Index, did rise by 4 points this month to finish the month as 10. Still, just like with the Millionaire Index, below the highest of all time, but slowly creeping back up there. This is a snapshot of the last 12 months of both the Affluent and Millionaire Investor Confidence Indices. As you can see in the Millionaire Index, this 10-point jump is the most significant that we have had over the past 12 months. The 4-point jump from the Affluent Investor Index is also tied, or just 1 point below, the jump that we saw from October to November in the orange line. So there is definitely a lot of optimism within the markets that we're seeing this month, in particular with both of these groups of wealthy investors. Looking at our household outlook for April of 2017, it did increase by just over 1 point to finish the month at 27.1. The outlook is comprised of 4 different aspects, which we'll be going over a little bit more detail on the next slide. But again, the past 2 months, we have seen steady increases by just over a point, each from February to March, and then March to April. There you can see that the top line just reiterates that 1 point increase in the overall household outlook. And then below that, you see the 4 components of the overall outlook. The largest jump being in household assets at almost 6.5. One of the things that we noticed last month in the final week of April, the NASDAQ did finish for the first time ever over the 6,000 mark and set an all-time high. That combined with the low volatility in the marketplace and the encouraging level of stability that has occurred in the past couple of months is definitely having an impact on how folks are kind of evaluating their overall, not just household outlook, but their complete financial blueprint. Going on to the factor most affecting the investment plans of the millionaire and the affluent investors, you can see both are right around a third that identify stock market conditions as the one factor that most affects their investment plans today. The concept of retirement will always remain something of a high level of importance. But right now, again, we have seen great returns since President Trump's election in November. And that combined with the stability that we've seen alongside last month in April, we did get a glimpse of what President Trump has in mind for the new tax plans, both lowering the individual tax brackets as well as the business tax bracket, which has had a positive effect on the overall outlook. And you can see here, once again, the stock market conditions are the one factor that most affects their investment plans today. Previously, going up from January of 2016 through the end of last year, you saw the political climate increase from 2% 2%, pardon me, to 10%. That is now back down in the single digits at 7%, and we've seen the coinciding increase in those citing the stock market conditions as the number one factor affecting their investment plans today. Here we see the preferences among affluent investors relative to different asset classes that they can be invested in. I think there are two main takeaways here. One, the increase in stock mutual funds. Again, we've really seen an increase in that fairly steadily since the end of last year, and a fairly significant jump from March to April. We've seen a commensurate decrease in the interest in people keeping cash on hand. So less amount of money is in cash and on the sidelines, and more is actively involved through mutual funds in the markets. And now I'm going to turn it over to Kathy to talk about some of our first quarter research on the attitudes and behaviors of wealthy investors. Kathy?
Thank you, Randy. First, I would like to explain a little bit how we collect our data for our larger studies. These studies are generally done, we do them every month, and in the total we have about 2,500 mass affluent, about 1,000 millionaires, and about 750 ultra high net worth. Now, I should explain what those terms mean. A mass affluent household are households with $100,000 to $1 million of net worth, not including their primary residence. The Millionaire study includes people who have $1 to $5 million of net worth, not including their primary residence. And finally, the ultra high net worth are households with $5 million to $25 million of net worth. So that is who we speak to on a regular basis, and that is, for purposes of this slide presentation, we put together the different segments. You will find that in our research, sometimes we sell just the specific segment that you might be interested in, say it's mass, millionaire, or ultra, but for purposes of today, we've combined them all together. Mass affluent households, as you can see, one of the most important questions that we ask is, how do you feel about your financial situation compared to a year ago? And you can see that for the most part, everyone's happier about their financial situation than they were a year ago. Even the mass affluent, who are generally the most reluctant of the group, more than half of the mass affluent are feeling more positive about their financial situation. Another thing that I want to point out as we go forward to keep in the back of your mind is the average age of each of these segments. Now, the mass affluent are slightly younger, and I guess the average age, I don't have it right here in front of me, but I think it's around 60 or 61. The millionaires are just slightly older, and the ultra high net worth are the oldest of these three segments, with probably an average age, I don't know, 65-ish, something of that nature. And if anybody's really interested, I can give you that information. However, that influences, what these people are doing and how many of them are retired versus non-retired. Of course, it's not surprising that the mass affluent, not always, but for purposes of the overall, tend to be a little younger, tend to be more likely to be working families as well. Fewer are retired, but that's not necessarily true. There are lots of millennial millionaires, you would be surprised. So for purposes of overall feelings, everybody's on an uptick. One of the things that we ask these investors is, so what is the primary objective of your portfolio? Are you looking for growth? Are you looking for income? Are you looking for security? And we found some very interesting challenges with this, or very interesting findings, I guess I should say. And it's not surprising that the most conservative of the group, the ones that are the most likely to be looking for security in their portfolio, are the mass affluent, probably because their portfolios are smaller. And the ones who are the least concerned about security are the ultra high net worth. The group that's most looking for income are the ultra high net worth, and those looking for growth are the millionaires. So it's an interesting way to think about how your investors are positioning themselves, or what they're really looking to achieve. When we ask the question about, would you prefer a guaranteed rate of return on most of your investments, the mass affluent are the ones that are the most likely to want to have a guaranteed rate of return. Another question that we talk about in our first quarter studies is really because we're looking at behaviors. So we're looking, at things like, what is your risk objective? What are you looking for? How do you make financial decisions? As you can see, most of these households, 56%, make financial decisions jointly. 39% say the husband makes most of the decisions. And as you can see, that changes based upon wealth level. It also changes, one of the things we don't have here is on age. Older households tend to be a little bit more likely to have the husband making most of the financial decisions. That may be a something left over from in the past. We also find that households where there are two incomes, which is becoming increasingly the way that these households live, it's less likely to be one person or another making the decisions. They're almost more likely to be joint decisions. And as for those 1% where they have other, I don't know, maybe their kids are making the decisions, who knows. What are their concerns? We ask these on a regular basis. We change some of them in or out, but as you can see, the one with the biggest differences is the tax increases. As you can see, the mass affluent, surprisingly, are the most concerned about tax increases, as opposed to the ultra high net worth, who are the least concerned about tax increases. Overall, investors continue to worry about the political environment, the national debt. They worry about government gridlock. None of those things have changed dramatically. The low interest rate on savings, that has been sort of a challenge, especially for those retired investors. So you can see the mass affluent are still the ones that are the most concerned about that. What about some personal concerns? Well, not surprisingly, the mass affluent are the ones who are the most concerned about maintaining their current financial position, with more than half indicating that they're worried about that. Now, I have to tell you that compared to several years ago when the financial crisis was happening, this number is much lower, but still it's kind of interesting that more than half are worried about maintaining their financial position. Less than half are worried about the financial situation of their children or grandchildren. This again was much higher a few years ago. Being able to retire when I want to, again, it's the mass affluent who have that fear. More of the millionaires and ultra high net worth are already retired, so they're not as concerned about whether they're going to be able to retire when they want. Myself or my spouse being forced into retirement is a concern, again, of the mass affluent. Financing the education of my children or grandchildren, as you can see, it's the mass affluent, again, who are worried about financing the education of their children. This could be because many are still working and are at the point of paying for some of those expensive college educations. One of the questions we asked this quarter, we thought it would be really interesting, was whether or not, because the whole Social Security issue becomes a big debate no matter what. And we've always found when we do research with investors, especially when we do focus group-based research, that people really think differently of Social Security than they do of taxes. Social Security, people feel like they've paid into Social Security, so they should be entitled to get it back regardless of their wealth level, regardless of whether or not they need that. Now, what you can see here is, do you think the age for receiving Social Security benefits should be raised? For the most part, the mass affluent and the millionaires agree with it. The ultra high net worth, actually, I read that backwards, didn't I? The mass affluent and the millionaires do not believe that the age for receiving Social Security benefits should be raised. And the ultra high net worth, more of whom are probably already retired, are okay with that. And then the more interesting question is, should those that have higher incomes be ineligible for Social Security benefits? And by wealth level, you can see, regardless of their wealth level, they all still believe that people should receive Social Security, no matter how wealthy they are. And that may become a big issue, maybe not perhaps this year, but perhaps next year, depending on what happens with our Congress and our president. So I just wanted to point out before I turn it back over to Randy that all of these slides will be emailed to you tomorrow. And if you have any other questions, be sure to send us an email or whatever works for you. Randy?
Thank you, Kathy. And just on the last couple of slides here, we always do like to highlight our monthly High Net Worth Insights newsletter. This is something that we have greatly bulked up and really increased the amount of insights and content within this monthly publication that a couple years ago was traditionally only around 8 or 10 pages in length, and now it's usually around 30 pages every single month. And we highlight not only some of the things that we discussed today, not just the index data and some of our wealth segmentation research, but we also do a lot of reporting and creation of articles based on some of our other one-off reports, things like our Wealthy Perceptions of Robo-Advisors research, some other reports that we published in 2016 on financial wellness in retirement, and not just some of our in-depth quantitative reports, but some of our qualitative research as well that is based off of one-on-one interviews that we conducted throughout 2016 with a couple of different groups of people. So please do reach out to me if there's any interest in learning more about our High Net Worth Insights newsletter, whether that subscription would be just for yourself, for you and your business team, or for the entire organization that you work with. I would be more than happy to speak with you about how we can make that happen and get some of our great content in your hands. As we look forward to next month, there's going to be a lot more discussion and a lot of headlines made around President Trump's initial kind of outline for the tax situation going forward. Taking the number of tax brackets from 7 down to 4 has been the initial outline. Just as important, especially when it comes to the wealthy investors of this country, is the reduction in the corporate tax rate down to 15%. So whether you're a Fortune 500 company or a two-person mom and pop shop, that 15% rate is going to be the max that business owners will have to pay of their business income in taxes, according to the president's new proposal. And that is certainly something that the administration is hoping will spur growth, both in hiring more people as well as putting more money to work and investing in their businesses and otherwise. So we will continue to take a look at how those affect the overall outlook, as well as the Millionaire and Affluent Investor Confidence Index. Right now, I would love to open it up to any additional questions that people may have for Kathy and I, whether it's about our index, whether it's about Spectrem, and some of the other research that we're focused on right now. We are open and welcome to anything that you might want to ask us. And it doesn't look as if there are any questions that are coming in right now. So this does wrap up the webinar for the day. Again, as Kathy mentioned, you will receive a copy of this deck. If there are any follow-up questions that you have or additional requests, do not hesitate to reach out to us, and we will be happy to get you whatever other materials you may need. Thank you again for taking the time to join us today, and we look forward to talking with you soon. Have a great afternoon.